These last few weeks have been quite heavy on the macro fundamental side, so we're going to go over a couple of articles when it comes to geopolitical tensions, when it comes to interest rates that are going to be coming out this week from the Fed and also Bank of England. Move on to the economic calendar to see what else we have coming out this week, and then finally move on to the technical side to see what kind of trades we are looking at. Starting off with some trade talks. So this week, US and UK officials are going to be meeting in Washington and talking about an economic agreement that would reduce the impact of some tariffs. Let's continue down. Nothing has really come to a conclusion yet. There's also not a lot of details that have been coming out about this agreement. But right now, the main focus from the UK side is to protect the British industry from the impacts of US tariffs, particularly the 25% levies on steel and car imports. And as we continue down, they also discuss a few other industries, particularly the pharmaceutical sector, threatening the UK's growing life sciences sector, and the film industry, which would hurt Britain's world-renowned film studios. And then they finally talk about another key point that's going to come up in these discussions, which is Britain's digital services tax, a 2% levy on revenues derived from UK users of search engines, social media companies, and online marketplace. And overall, the sentiment for this conversation, but also what they're having with US and China, US and Japan, and any other nations is that a lot of these nations have been hit very hard, including US, with certain sectors because a lot of these nations specialize in certain sectors, and that's why we have a lot of these trade partners where US has been a major trade partner with China, but also the UK, Canada, Japan, and so many other nations that Trump has imposed these tariffs on, and they're being hit very hard, the nations themselves, but also the US itself. So ever since Trump started imposing these tariffs on these nations, and we started seeing those retaliatory tariffs in return as well, we have seen the volatility and the turmoil that has been happening in the markets, overall on a global level. So that's why these negotiations and these agreements are very important. But also, you're going to see a lot more volatility as these more discussions are coming out. As we start to see more news about potential agreements, potential negotiations, you might see a bit of an ease in the market as equities start to increase or bounce back from the massive losses that they have been seeing. Certain currencies also gaining more strength, and we're going to hop into one particularly very soon as well. So there's going to be a lot of volatility in the markets overall, and it's for this reason, because tariffs are very detrimental to certain sectors, and they're also very detrimental to the overall economic activities that are happening with all these nations, and also the trade partners and trade deals that are happening. So this is, an overall understanding as, you continue to see more of these trade talk news that are coming out. So this was for the UK and the US. Same thing pretty much applies to US and China, overall too. There has been this trade war that has been going on with US and China for a very long time now, especially with Trump's first term a few years ago. But it's the same exact sentiment where US specializes in certain sectors, and those are the types of goods and services that they export out to China. China specializes in certain goods and services as well, which they export out into the US and other parts of the world as well. So this is why it's very important to understand what are tariffs, why should we really care about them as investors in these financial markets, and what the impact is of these tariffs on the different economies. And so after the back and forth that has been going on with US and China, finally we start to see that US-China trade talks to start this week as tariffs start to bite. And here we have the US Treasury Secretary and the US Trade Representative who's going to travel to Switzerland for trade talks with China. That's going to happen over Saturday and Sunday. And overall, the travel was announced in statements Tuesday from the Chinese and US governments. It's going to be the first confirmed trade talks between the countries since President Trump announced the punishing levies as high as 145% on China that were met with retaliatory rates of 125% from Beijing. So these conversations are going to happen on Saturday and Sunday, and it's going to center it's going to center on mainly the de-escalation rather than, coming to a big trade deal or anything like that. So the main focus here is, again, to de-escalate rather than a trade deal. And all this news particularly has been seen with a positive development in the markets, where you're starting to see that the dollar is strengthening and the US equity futures are also rising. And then another quick summary. So when I was talking about the currencies that are being hit, and then, one currency really dropping compared to another one, here's that particular example where the dollar faces $2.5 trillion avalanche of Asian sales. What we have is Asian countries which are potentially starting to unwind their large stockpile of dollars that they have gathered over the last few years or so, and potentially triggering a $2.5 trillion avalanche of selling, where investors and policymakers are entertaining the appreciation of Asian currencies against the dollar and really reconsidering the US dollar's exceptionalism. But this is in an effort to really secure a trade deal with the US as well. So when we hop over to, USD JPY or USD paired with any other Asian currency, you're really going to see, how much the US dollar itself has dropped. Or even if you look at the DXY, which is, the dollar index, you're going to see the same exact thing, a massive drop that has been happening with the dollar. And a lot of this is coming from that massive stockpile that a lot of these Asian exporters and institutional investors had. And now they're starting to, dump that. And we're seeing a sharp downside risk to the dollar as these investors are starting to let go of their positions as well. Another geopolitical tension news here, where we had India, Pakistan trade deal or trade military strikes after the Kashmir attack that happened on April 22nd. And here what we have is India conducted a targeted military strike against Pakistan, hitting 9 targets as a response to the attack in Kashmir that killed 26 people. In return, you had Pakistan that came back and retaliated and claiming to have shot down about 5 Indian jets, but both nations historically have been known to show restraint in the past, and they're likely to avoid an all-out war. So that's what the investors and the financial markets are really watching out for. But ever since the news came out, we also saw that the Indian benchmark NSE Nifty 50 index also swung between gains and losses. So we're starting to see those financial markets that were also sitting in a lot of volatility ever since the news came out. So, this was pretty much the first attack from India as a retaliatory measure to the Kashmir attack that happened in April 22nd. And now what we're looking at as investors on the sideline is this going to continue to accelerate the tensions, or are we starting to see that they're going to show some restraint and kind of pull back as they have been known to do in the past as well? And last geopolitical news here, which is the US bombing campaign that's going on in Yemen. So the President Donald Trump said the U.S. would stop its bombing campaign in Yemen after a ceasefire was facilitated by Oman, even as the group pledged to keep targeting Israel over its Gaza campaign. So Trump has acknowledged that they just don't want to fight, and we will honor that, and we will stop the bombings. And they have, but more importantly, we will also take their word for any potential ceasefire that's going to happen. So the precise terms of the agreement haven't been released, and it wasn't immediately clear if the move would lead to the resumption of commercial shipping through the Red Sea. A lot of the Red Sea and the American vessels have been impacted because of this. So this is just added, geopolitical tension news that has been going on in the background as well, related to Israel and the Gaza news that's coming out for the last, about almost a year or so. Now, some of the more high impact news, particularly for this week, that is going to impact gold, that's going to impact US30. And if you're trading GBP pairs, it's also going to impact the pound, is going to be more of the interest rate news that's coming out from the Fed and Bank of England. So far, the expectation is that the Fed is going to hold rates steady as the pressures mount, and that's what they've been doing for the last few months. really we're going to see the same exact thing that they have been saying for the last few months, which is that they're waiting for more clarity on the Trump administration's trade policies, the effects of the tariffs, and things like that. And right now, what we have been seeing when it comes to economic data points as well is that the latest data shows inflation slowed down in March, unemployment rate remained steady in April, but the economic outlook remains uncertain, and the probability of them saying that continues to increase. So that's what we're going to look at when it comes to monetary policy statements, when it comes to the press conference. It's going to be mainly this. We're not really expecting a rate cut. We're not really expecting anything else to really come out. And they're still saying that their balance sheet still looks pretty strong and they're going to maintain it at the same exact policies that they have right now. So really we're not expecting to see them increasing the balance sheet or decreasing it, reducing it, or anything like that. We're expecting them to reiterate the same exact things that they have been saying the last few months. But when you're looking at the pricing in the futures market, that is indicating potential quarter point rate cut in the July meeting, and then potentially another 2 or 3 more by the end of the year. So when it comes to the actual rate news, when it comes to a statement, we're not really expecting anything different. We're just expecting them to say the same exact thing and repeat the wording from their March 19th statement. The emphasis is going to be more on the press conference and seeing what Powell is going to say, see if there's going to be any sort of clues or indications of, what kind of economic outlook are we looking at? What is the Fed? Is the Fed going to be continuing on that 2 rate cuts, 3 rate cuts for the rest of the year? Are we seeing a change in that? And then also any sort of responses to what Trump has been saying about, Powell and wanting to fire him and things like that. But the sentiment is that he's not really gonna, he's gonna avoid any responses that will antagonize the president and emphasize the Fed's independence from elected officials in monetary policy deliberation. So again, the main focus when it comes to the Fed's news this week is gonna be more on the press conference rather than the monetary policy statement and the actual rate cuts like it has been in the past. Let's continue. Right around here. So this is another article that I want to go over as well, which is the UK market volatility adds to bets Bank of England will pause bond sale. So what we have is strategists at Bank of America and BNP who are bullish on the long maturity gilts in a bet that the Bank of England could stop the bond sales from October. And a lot of this was mostly an effort to unwind Bank of England's vast stimulus since the financial crisis and the pandemic. So even though it's going to be too early for officials to give a firm steer on the future of the so-called active quantitative tightening, any commentary before the news that's going to come out in October and even September is going to be studied very carefully by the markets. So that's what we're looking at when it comes to Bank of England, and when it comes to what kind of interest rates we're looking at, what kind of news that we're looking at as well in terms of their monetary policy statements and Governor Bailey coming out during a press conference. That's what we're looking at. Overall, what we have seen though is that the policymakers have been using a mix of actively selling bonds and stopping reinvestments upon maturity to reduce the Bank of England's balance sheet too. So right now, we're seeing the same exact thing where Bank of England is on the right path to another quarter basis point cut. So coming from that 4.5 down to a 4.25. But another important thing here is going to be to watch out for the Bank of England's inflation letter too. So that's what I would be interested in the most. And we already know that there's going to be a rate cut, but we're also going to take a look at what happens with Bank of England's decision on its quantitative tightening plan for the remainder of the year, and take a look at what these MPC members have to say, and if there's going to be any sort of clue regarding if we're going to see the pauses happening actually in October or even later than that. So now moving on to the economic calendar side this week, as you can see, we started off quite easy with some bank holidays happening from Japan, and then also GBP side. You have ISM services PMI that came out from the US. Continue down. a lot of yellow folders, and then things start to pick up today, where you had employment change and unemployment rate coming out from New Zealand. Interest rate news that's going to come out in New York session from the Fed. So again, maintaining the same exact 4.5%, unlike Bank of England. Then the press conference, which is going to be the more important news, and that's what the investors are watching out for. And then after that, going into Thursday's London session, you have the Bank of England's interest rate news coming out, where we're expecting that 1/4 point cut. And then again, more of that emphasis being more on the inflation letter and what is happening when it comes to, the bond sales and things like that from Bank of England. Then you have unemployment claims coming out from the US, and then remainder of that, it's a little bit easy until Friday when you have Bank of England's Governor Bailey speaking, which is going to be very important, especially after Bank of England's interest rate cut. And then some of the FOMC members, a lot of them actually, who are coming out and talking from the US side. And this is going to be in a fireside chat at a county in Virginia, basically, a county chamber of commerce in Virginia. So that's where a lot of these FOMC members, they're going to be coming out and basically, giving us a potential hints when it comes to economic outlook. And that's what the investors are going to be focusing on, to see if there's going to be any sort of clues. What kind of sentiment do these FOMC members have? And what can we expect going into July's meeting? And if we are actually on track for that 2 to 3 rate cuts, or are we expecting the Fed to hold out the interest rates for a longer period of time and really only see 1 to 2 rate cuts? So the main concern for any central bank is, again, having to cut interest rates too soon, but then after that having to increase them back up, or take any measures that you would see as a reversal instead. So especially with the tariff news, which we know, impacts inflation, also increases inflation. It also has been, with the employment side, has not been really the strongest the last few months, as we're actually seeing unemployment rate being at a very steady rate, especially with NFP that came out last week. So all of those kind of point to the fact that the Fed is sitting on the sidelines and kind of just watching what happens, and actually wants to see and get more clarity on the effects of all of this, so then it's not cutting rates too soon. So these are some key points to understand when you're looking at the markets. So again, key fundamentals for each of the pairs, I have that on the side here for you guys to follow along too. So when you're looking at US30, you have the key fundamentals for this week, which is the US trade talks with UK and China, the Asian current countries that are selling large stockpiles of the US dollar compared to the Asian currencies, the Fed's interest rate news that's going to come out, unemployment claims, and then the FOMC members who are going to be speaking on Friday. So let's start off with the monthly time frame. We've had a massive bottom wick rejection already, which is more like a liquidity grab. So I'm going to mark that off, and we're going to adjust this as we drop down to lower time frames as well. So this is going to be your 36,500 level. After that, massive bottom wick rejection, came back up, closed right up into that level. So this month we started off a little bit bullish. So I'm going to mark off right into that support that the current monthly candle is making. And we're going to make that 40,660 level. So if I zoom in, then you're going to start to see how price is holding onto a support here as well. Let's come on to the weekly time frame. And on the weekly time frame, we start to see, where pretty much price came all the way down here, grab that liquidity. How do you know that's liquidity? We're going to look at the volume that follows after that. So the next few weeks, price pretty much brought us right back above this level of support that price was holding onto right here. And it was also a previous resistance. This week, a little bit of a top wick, and then a little bit of a bottom wick, kind of just hanging around here. And the main thing here is going to be more of that interest rate news and what's going to happen at the press conference, and what kind of indications that we see when it comes to the economic outlook. So I'm going to mark off that resistance that we have marked off right here, which is going to be that 41,370 mark. And if price breaks above that, then we know that we're looking for those buying opportunities to the upside, potentially coming back up into this bit of a resistance. So you can create this a zone, you can create this a line, it's really up to you. If you had a zone, you would really mark off this little support area coming all the way up top here, which is that resistance. I'm going to mark off that resistance here, which is going to be that 42,140 mark. So if price breaks above 41,370, we're headed up into 42,140 mark, and that's going to be the range of buying opportunities for me. When it comes to swing trades, if I'm looking for any scalp opportunities, this is going to be my range to range trade right here. And then sells are going to be below when price breaks its bottom wick and then continues pushing back down from there. We come onto the daily time frame, you start to see a bit more of a consolidation formation here. The last couple of days, this is really when we broke above this April 30th. And then after that, we kind of just hung around this area, not really breaking the previous highs or lows. This also confirms that support on the daily time frame. And then this is also that support right here. For the current daily candles are being formed right here. So this is my zone to zone trade. So if I'm looking for buys or sells, scalp opportunities, it's going to be between that 40,660 right here or that 41,370. Any longer term buys or sells are going to be above and below this. So we do have some opportunities to come back up and kind of tap into this area. If the Fed maintains the interest rates, I do expect, a bit of a bullish reaction that's going to happen in the markets. If it ends up cutting interest rates, which we know that is not really going to happen, it's really not on the books. I'm just expecting price to kind of wick around here and then show us more volatility in the markets, breaking highs and lows. But the expectation is that the Fed is going to maintain the interest rates. I'm expecting a push. And then after that, I'm expecting more of the volatility to come into the markets closer to the actual press conference. And we're also, going to read up what's happening in the monetary policy statement in the group. So we're going to be trading that together. We're going to trade that live together. And we're going to see, if there's any other indications that we're really not expecting. But overall, the expectation is a bit of a push up, come into that 42,140 mark with the Fed maintaining the interest rates and maintaining the same exact words and speech from the March 19th meeting as well. Come on to the 4-hour time frame. So again, all that is just consolidation. If you're looking for scalp opportunities, it's a zone to zone trade. And if you're looking for any sell opportunities, then you're waiting for this low here to be broken. That way you're breaking the weekly low too. And then after that, I would be targeting more of the first area of TP, which is going to be coming all the way down into the support area that price holds onto right around here. So with these candle closures and then coming all the way down. If price breaks below that, then you're coming all the way down here into this area. So that 39,200 would be the next area of target. So the first area of target is 39,000, almost 700, 600. And then after that, 39,200 for sell opportunities. For buys, you're waiting for price to break above 41,370. So once again, these are the key fundamentals for this week when it comes to US30. Before we hop onto the currencies, I do want to go over the dollar index. So last couple of months, the article that we looked at where the dollar was facing that downward pressure because of the Asian exporters and investors who have amassed extremely large piles of the dollar through the years. And now they're looking to sell that and start this sharp decline with the dollar. We have already been seeing that the last couple of months. And then price just continues to push back down. So that's where we're currently sitting at when it comes to the dollar index. We're sitting at a very critical level, a very critical previous resistance as well for, several years. And then finally, we broke above that in 2022, maintained that area as support, and we're starting to kind of break below that once again. So we're at a very critical level when it comes to the US dollar. Let's hop over to GBP JPY, then we have USD JPY, and finally gold. So key fundamentals for this week, broken up between the two currencies. When it comes to the pound, you have Bank of England's interest rates. We're expecting a quarter point cut. Then you have the Bank of England's inflation letter that I'm going to be watching out for too. And then you have Governor Bailey speaking and the MPC members who are going to be speaking. When it comes to the Japanese yen, again, because of that article, we're seeing that investors are flocking more to the Asian currencies. You have geopolitical tensions are increasing too. So that causes another increase into safe haven assets and currencies and commodities. And then Bank of Japan maintained their interest rates at 0.5% in this latest meeting that came out and the latest interest rate release too. So now looking at the monthly time frame, we're sitting in a bunch of this consolidation for the last, almost a year now. So what we have is price holding on to support right into this area. So that's what I'm going to mark off, which is going to be that 189.6 mark. And then you also have a resistance that's being formed up top here. So that's kind of where price is sitting at. That's your entire monthly range. I'm going to narrow that in a bit more because before we're even headed up there, we need to break above this resistance. And so this is going to be the 194.1 level. And then let's go ahead and drop down to the weekly time frame and take a look at what's going on here. So we do have, price breaking below this level of 189.6. But when you look at it overall, on average, you have a lot of consolidation between this range, and that's what we're sitting at right now. So before we even head back down into that 186,700 or even lower than that into 185, let's say overall, we need to break below this, and then we can continue down here. So this is going to be the first target for us. This is our initial range. After that, if price breaks, then we're headed back down into these areas and we can start to target those. But unless price can break below, 189.6, we don't really have a selling opportunity to come back down here. And if price doesn't break above 194.1, then we don't have a buying opportunity to come here. So that's what we're targeting right now. And then when you come onto the daily time frame, what we start to see is price is holding onto a very strong support the last couple of days, right around here. So if price can, continue maintaining the support, break the previous daily high, break its own high, and continue pushing back up bullish, then we're targeting our buying opportunities to come into 193.1 area. And then if price, just simply makes a top wick, shows us some volatility and pushes back down, then we're looking for selling opportunities to come into 186.6 area. Other than that, you have a zone-to-zone trade that you're looking at. Another minor level that I would mark off for intraday trades, it's going to be this. So this is more of that zone-to-zone trade that I'm talking about right around here. So even within this, you have a pretty good range if you're looking for any scalping opportunities or anything like that, or even day trades, about 125 pips that you can still target. So when I say zone-to-zone trading, I mean that price came all the way down here, held on to support, and we look at what has price been doing historically. So after price rejected here, it does tend to push back up. So we had a push back up into this area. So that was 125 pip moves that happened here. On a 4-hour time frame, we rejected that, came back down, closed almost bearish doji. So there's a very high probability that price is going to push back down into this area or even consolidate out. Come on to the hourly time frame, same thing. So if you want to narrow in your levels even more, I would say any clean sell opportunities would be, price breaking the previous hourly low, pushing back down. So, you can look for a trade right now. And then this would be your first target, which is going to be that 190.9 mark. And then if price continues pushing below that, then you have that continued trade that you can hold on to. So you could start off with an entry at the moment, come all the way down for about 16 pips or so, which is your very quick scalp, and then come down and hold on to your trade for about 70 pips or so. Same thing if you're looking for buying opportunities. Let's say price just consolidated out here and I'm narrowing in my zone even more for potential scalps, then I would have that 191.2 level marked off. If price breaks above that, then I have this range to come back up into that zone. Look for a wick fill that happened on the previous hourly candle for about 30 to 40 pips, depending on where you are in that zone. But anything in between, I would be very careful looking for a trade here. And that's where you see on the hourly time frame a ton of consolidation. Usually when you see consolidation on the 4-hour, 1-hour daily timeframes, it means just to be a bit more patient because there is either a market open or more higher impact fundamentals that are going to come out, which is going to help you with that movement in the market. For this pair, the key fundamentals, this is going to be a very important pair. You're going to see a bit of a tug of war that's going to be happening between these two currencies, mainly because of this and also the geopolitical tensions that are happening. The US dollar, kind of in jeopardy with its world reserve currency status. And a lot of the investors are flocking over to Asian currencies. And we know that one of the Asian currencies that has always been known as a world, safe haven asset is the Japanese yen. So you're going to see a bit more of a tug of war that's going to be happening here. Key fundamentals, again, broken up with the two currencies. With the US, you have Fed rates, unemployment claims, FOMC members, the trade talks. With Japan, you have the investors that are flocking to Asian currencies. You have Bank of Japan that maintain the interest rate at 0.5%. And then you also have the geopolitical tensions that are still increasing when it comes to the tariffs, when it comes to U.S. bombing campaign in Yemen, when it comes to India and Pakistan war that's happening. So everything like that. On the monthly time frame, once again, you got that support where price is sitting at right now. So you have that 142.6 level. And then what I'm going to do is mark off the current monthly top with projection, because if price breaks above that, that's the only way that we can come up into that 151.7 area. So this can be my current range right now. So what I want is price to break above 146.3 prior to looking for any buying opportunities for a longer term trade. When I come onto the weekly time frame, this level checks off for the most part, where you see that this is an area where price tries to break below, rejects it, comes back up. Same thing here, tries to break below, rejects it, comes back up. Same thing here, tries to break below, rejects it, and comes right back up. So we're sitting at a very critical level at the moment on the weekly and monthly time frame. Let's go ahead and drop down to the daily time frame. Here you had that quick fake out, price holding onto this area of support. So we know that if price continues pushing above this area here, then we have those clean buy opportunities. And a lot of that can come from the relief of all these trade talks and negotiations that are happening with US and these other nations, which is going to bring in a bit more optimism from the investor aspect. So if price breaks above 143.700, then we have a pretty good range of around 187 pips and even more to coming into 259 for any buying opportunities. For sells, we would need price to break below that and then continue down into that 140.8 area or 140.9 area, really into this range. And we can look for those sells to come back down. But the main thing is going to be breaking below 142.6 for USD JPY. Now coming onto the 4-hour time frame, again, price consolidating here for the most part. So what I would suggest is waiting for price to completely clear out of these areas prior to looking for a trade, or you're looking for a zone-to-zone scalp opportunity. Drop down to the 1-hour time frame. Your zone-to-zone trade is going to happen with price rejecting into this area and then pushing back down. So you have a bit more with the hourly time frame to push back up into this area, reject it, come back down into this next support of 142.6. If you want to narrow into the levels of what is my no trade range versus what's a clean trade opportunity that I can look for. So anything above 143.3 and then a continuation up, those are clean buys to the upside. And then anything below this area of 142,900, those are your clean sells. Anything in between is consolidation, which is really what you should be, staying out of, unless you're looking for quick scalps on 15-minute, 5-minute, 30-minute, something like that. But if you're looking for something a little bit more long-term to kind of hold onto it for better risk to reward, then you have about 30 to 40 pips that you can target to the upside. And then you also have about 30 pips on the downside as well in either direction. So those are safer bet sells and buys on USD JPY, quite similar to what is happening with GBP JPY. Now we hop over to gold. So key fundamentals for gold, the war that's happening, US and UK interest rates, US trade talks with China and UK, and then also the potential ceasefire agreement that's going to happen between US and its bombing campaign in Yemen too. So overall, what we have seen is a massive bullish push up on gold, and it's really not stopping. And we're coming back, and we rejected previously into that 3,500 mark almost here. And the expectation from an investor institutional perspective is potentially tapping into that 4,000 mark. And that is what JP Morgan, for example, has been targeting too. So the 4,000 mark right now. So here I also have that support, which is that bottom wick rejection. I'm going to mark that off as that 3203 level, which is that bottom wick rejection. Come on to the weekly time frame. So a few weeks ago, we had a massive top wick rejection into 3,500. Last week, we closed back down bearish, but really not a huge momentum to the downside. This week, no bottom wick. A lot of it started with the geopolitical tensions, as we're talking about, and the price pushed back up. What I'm going to do here on the weekly time frame, though, is mark off that previous resistance. Anything above this, I'm looking for any buying opportunities, which is going to be that 33.32.4 mark, and then continuation to the upside. That's my buys. I'm looking for clean support to be formed here, and then a continuation up. Right at that level, we had consolidation for a few days, and then finally a nice sell-off. We held onto this area of support, pushed back up bullish. We had a closure right here bullish, and then today we started with a little bit of a gap down. So what I want to see is this area of 33.32 area being respected at support. So really anything into this range, I know it's a pretty big range, but I would want that area to be respected as support, price to break these highs here on the 4-hour and 1-hour time frame. That way we have those clean buy opportunities where really nothing's stopping it to tap into that 3,500. And then same thing here on the 1-hour time frame, a massive push up, a little bit of consolidation that started. So are we headed back down into this area? You can absolutely take advantage of these sells too, as price continues to break below this bottom wick rejection right here. So that's going to be your 33.61.9. As price breaks below that, comes down into that 33.32.4. That's your sell opportunity that you can take advantage of. But this is the most important level that I really care about, where I would want price to hold on to support if it's going to continue pushing back up bullish and then continue to the upside. So then I can look for buys above that 33.61.9 to the upside. Anything in between here, I really would not be entertaining any sort of trade. For me personally, that would be a no trade range just because of those fake outs and consolidations that have happened in the past. And then for a continued sell, I would want price to break below that 33.32.4 and then look for those sells to come back down into that 3,300 or 32.75 mark, which is right into that support right here, and then previous resistance. So that's pretty much it for this week. And some of these levels, when you're looking at the daily, weekly, and monthly, they're going to check off for the next week as well, early next week. But make sure that you guys are paying the most attention to the macro fundamentals, geopolitical tensions, because those are going to be the drivers for these markets. Fundamentals is always the driver of the market, and make sure that you're following proper risk management. In market conditions like this, it's very easy to overtrade, over risk. Make sure you're not doing any of that stuff. And other than that, I will see you guys next time, and make sure you're trading safe.